All right, everyone, buckle up. We're diving deep into Indian food tech today, specifically Swiggy's IPO. Like, can they actually pull off a Zomato?
Oh, that's a good question. With Zomato already killing it, it's like, who will be the king of like biryani
Oh,
delivery?
huh, exactly. And we've got some great sources to help us figure this out. We've got this Kotak Securities analysis, some interesting opinions from analysts at Stock Market News, and a deep dive from financial analyst Shanokupa on YouTube. Oh, and some Morgan Stanley insights too from Business Standard. So by the end of this, you'll know if Swiggy is worth your rupees.
Okay, so to start, Swiggy wants to raise like $1 to $1.2 billion with this IPO. They're aiming for a valuation of $10 to $12 billion.
Whoa, that's a huge jump from their 2020 valuation.
It is.
And that's what makes Zomato's journey so interesting, right? I mean, they went public in 2021 at $13 billion.
Yeah.
And now their market cap is over $25 billion. So, like, they've totally made it.
Totally. But you know what's wild? Swiggy actually used to have higher revenue than Zomato.
Wait, really?
Yeah. Shashank Kupal pointed that out. So the question is, how did Zomato get so far ahead?
Right. Okay, so let's compare them head to head. Revenue first. Swiggy is projected to hit 11,247 crore rupees for fiscal year 2024.
Okay.
Zomato, 6,578 crore.
Yeah. See, but Zomato's growth rate is much faster than Swiggy's. That's kind of what's exciting investors.
That makes sense. And speaking of investors, profitability, right? Zomato's already making a profit, but Swiggy, still in the red.
Huge red flag for some investors. If a company isn't profitable, it's like, how sustainable is their business really?
Totally. Now, market share. Zomato's winning there too, right?
Oh, yeah.
They control something like 58% of the food delivery market, while Swiggy's at 34%.
Yeah.
And then there's their quick commerce arms, Blinkit and Instamart.
Right.
Blinkit has like 40 to 45% market share, and Instamart only 20 to 25%. They're dominating on all fronts.
Yeah, but remember, market share can always change. And for anyone who doesn't know, quick commerce is like, imagine a mini Amazon. You get stuff like groceries delivered super fast.
Like the 10-minute delivery craze.
Yeah, exactly. It's booming in India, much more than anywhere else in the world.
Why is that? Why India?
Well, a few reasons. One is just how dense cities are. Like Mumbai, Delhi, so many people packed together makes fast delivery easier. Plus, more people have money to spend now. They want convenience. Quick commerce delivers that. Literally.
Okay, that makes sense. Let's zoom in on this quick commerce battle. Blinkit versus Instamart. Blinkit seems to be ahead on, like, gross order value, average order value, monthly users. But there's one thing Swiggy does better. GOV per MTU. Like, their users spend more per order, even if they order less often.
Right. Interesting, right? It might mean their customers are more loyal, sticking with Swiggy and spending more each time.
Or maybe they're attracting a more, like, premium customer, someone willing to pay more for, I don't know, better quality stuff or a better experience.
Right.
It really makes you wonder, like, what makes people spend differently on these apps? Like, is it the products, the marketing, even how the app looks? There's a lot to unpack there.
Definitely. Yeah, lots to think about. But to really see where Swiggy stands, like, can they actually become the next Zomato? Let's hear what the analysts say.
Okay, analyst time. First up, Akriti Malhotra from Stocksbox. She's kind of leaning towards Zomato because of their size, you know. They're profitable, they're growing like crazy. But she says Swiggy could still be a contender if their IPO goes well and they actually, you know, deliver on their plans.
That's the key. Zomato has a head start, but Swiggy could still surprise us.
Right. Then there's Anshul Jain, head of research at Lakshmisgri. He's team Zomato too. Mainly because, well, they're making money. He's not so sure about Swiggy yet, especially since their IPO is a lot of face. Offer for sale, OFS. So basically, existing investors are cashing out.
Right, and for anyone who's not familiar with OFS, it means a big chunk of the IPO money goes to those investors, not back into the company.
So it kind of makes you wonder, are the people who already have money in Swiggy getting cold feet?
Yeah, it's a question investors might ask. It's not always a bad sign, but they want to see that the IPO money is being used to like actually grow the company.
Makes sense. Okay, next analyst, Jathin Kaithavalapil from Choice Broking. He says overweight Zomato, so put more of your money there.
Okay.
But he's open to a little bit in Swiggy, you know, just in case they do take off.
It's a balanced approach. Acknowledges the leader, but leaves room for the underdog.
And finally, Morgan Stanley. They point out that Swiggy's behind on some key stuff, but they also say that Swiggy's IPO could really shake things up, like make Zomato work harder to stay on top.
Competition is always good, right? It pushes everyone to be better.
Absolutely. So taking all this in, what are Swiggy's biggest, strengths and what risks should people be aware of? Break it down for us.
Okay, let's start positive. Quick commerce is huge for Swiggy. Like we said, mini Amazon potential. And as they go beyond the big cities, there's a huge market waiting.
And they're already there with Instamart, even if they're behind Blinkit.
Exactly. Another thing for Swiggy, getting costs under control. If they can be more efficient, they can reach profitability. That's what investors want to see.
Competition is tough, right? Amazon, Tata, Geo, they all want a piece of the quick commerce pie. And then there's regulation. Always a possibility.
Oh yeah, regulation can change everything in an industry like this. Delivery times, pricing, everything. Investors need to watch that closely.
And Swiggy's doing a lot at once, right? Food delivery, quick commerce, dining out, groceries, even meat. It's a lot. Are they spreading themselves too thin?
Yeah, it's like they're trying to cook too many dishes at once. Focus is important. Zomato seems to have figured that out, sticking mostly to food and quick commerce.
Now remember, Shashank Kupa mentioned another way to invest in Swiggy, the unlisted market.
Oh yeah, that's a whole different game.
It's a bit risky, right?
Yeah, definitely. You're buying shares before the IPO, usually at a higher price.
Right.
It's harder to sell those shares if you need to, and sometimes you can't sell for a while, like 6 months or more.
So not for the faint of heart, but it's interesting to know it exists. So for our listeners, should they jump on this Swiggy IPO or stick with Zomato?
It really depends. Each investor needs to figure out their own risk level, their goals, their strategy.
No easy answer, huh? But hopefully this has helped people understand what to think about when investing, not just in food tech, but anywhere.
Yeah, it's a personal decision, for sure.
Yeah.
But, it's fun to think about, what could Swiggy become? What's their future?
Yeah. What do you see happening?
Well, we talked about quick commerce, that whole mini Amazon thing.
Right.
But what if they go even further, beyond food and groceries?
Okay, now you've got me curious. What do you mean?
Imagine you open the Swiggy app.
Mm-hmm.
It's not just for when you're hungry. It's for, everything.
Everything.
Yeah. You can order, groceries, but also medicine, clothes, electronics, maybe even tickets to a movie or a concert.
Whoa, so it's not a food app anymore. It's like your whole life in an app, like a digital butler or something.
Exactly. That's super powerful. The more they offer, the more useful the app becomes for everyone.
And that would give them a real advantage, right? Zomato's great for food, but they haven't really tried that whole everything in one app thing.
Not yet, no. And if Swiggy can do it well, make it easy to use,
Yeah.
They could be essential.
A total game changer. But, it's one thing to have the idea, another to actually make it work.
For sure. It would take a lot of work, a lot of investment, tech stuff. They'd need to find partners, figure out deliveries, constantly be coming up with new stuff.
It's risky, but also exciting.
Totally. It shows that in business, anything can happen. Maybe in a few years, we'll be living our whole lives through these apps.
Crazy. Well, that wraps up our deep dive on Swiggy and their IPO. We looked at the numbers, the competition, what could go right, what could go wrong.
Hopefully everyone listening has a better idea of how to evaluate companies, not just food tech, but anything.
Always do your research, know your goals, and how much risk you're comfortable with. The world of investing is full of possibilities, so stay informed and stay curious.